Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Thursday, January 26th, 2012. A lot to cover, so let's get right into these charts. I'm going to start off with the S&P 500 E-mini futures, which are trading higher today by nearly 5 points to 13.25 per contract. Pretty solid move up in the futures market once again. Looks like there's no stopping this freight train of an inflation rally. So markets getting what they wanted to hear yesterday from Ben Bernanke. He moves out his forecast, keeping the 0% interest rate policy for the Fed funds rate until late 2014, upping it from 2013. So a little bit surprised that really moved the market that much, but nonetheless, the statement did really have an effect on the market. And once again, low interest rates make it a real nice environment for people to invest in stocks instead of putting their money into anything else. So that looks like what's happening here. Don't want to make too much out of this going forward because there's a lot of rumor about QE3 and things of that nature. You wouldn't expect that to come right away, but Ben Bernanke said that he has tools available and people are interpreting that as a QE3 on the way. So once again, we'll see how this market trades. It's a little bit overbought, a little bit extended, but nonetheless, it continues to inflate higher and higher each and every day. Every little pullback in the morning is being bought up. And once again, you saw it yesterday. First move was a down move and then a rally afterwards. So until that changes, you got to keep continuing looking for that type of action in the market. A couple of things to go over right now. The U.S. dollar index trading lower by 40 cents. U.S. dollar index has been slammed. Look at the fall here on the daily chart of the dollar. You can see right here, dollar has really just been pummeled to the downside. And again, it is trading lower once again. So dollar has been hit again, and that inflates the market. That inflates commodity stocks. Anything copper, steel, gold, silver, oil, any food commodities, they're all trading higher. So once again, dollar down, weaker dollar inflates everything up a little bit much. So let's take a look at the GLD today. Gold had a sensational move yesterday. Gold really soared, now coming up into this 167 level. So you got to watch for a little resistance up here. But again, if the dollar falls, gold and silver will make a move higher. Let's take a look at silver today. Silver is trading right up around that $32.50 level on the SLV. Again, this is just another trade inverse to the dollar. Let's take a look at USO. Same exact thing. USO is oil spot crude is trading higher today. I believe by about $1.40, trading back above $100 a barrel to almost $102 a barrel. Excuse me, $101 a barrel. And you see the USO trading up around that 38.80, 38.75 level. So decent pop for oil this morning to start the day. And again, this is just another trade inverse to the dollar. Remember, dollar down, stock markets inflate and trade higher. That's what you have to watch for. Okay, there's a lot going on in the marketplace in Europe as well. The last couple of days I talked about Portugal coming back into the picture, needing a secondary bailout. Today, believe it or not, Portuguese yields on their bonds are spiking, and that is confirming what we thought was going to happen. So now you have Greece looking for a secondary bailout, and now Portugal is waiting in the wings. Has not seen a lot of press or publicity, but Portugal's the one to worry about here. And then you're going to have Greece and Portugal both needing secondary bailouts. I think it's just only a matter of time before the European Union crisis comes back into play and people are starting to worry about it. But right now, nobody seems to care. As long as the Fed is keeping this accommodative low interest rate policy available, the market seems to be euphoric at the moment. The funny thing is that, in my opinion, I think the Fed will keep rates down at 0% probably for the next 10 years because that's the only way that the United States can afford to pay their interest on their debt. So, it's funny how the Fed just keeps extending their forecast out. But the truth of the matter is rates should be down at low levels for even a longer period of time, if you ask me. Now, let's take a look at some stocks that are moving the market today. We're going to start with Under Armour. Under Armour is trading down pretty sharply. The stock is going to have pretty decent support around $70 if it gets there. And if it breaks 70, do not touch this thing. It's going down to 65, 64.50. Okay, so Under Armour with some support at 70 could be bounce support there, short term, intraday bounce support. And then after that, if it does break it on a closing basis, then you're going to have to look at $65 for Under Armour. But that stock is getting hit today. AT&T is in the news a little bit today. Stock is getting hit a little bit, trading down to around the 29.50 level. Nothing damaging. 29.50 is still some support. Even 29.35 will be some support. AT&T has a ton, and mark my words here, a ton of support at $28.90, just below the 29 level. Okay, so that's what you're going to watch for short-term support there for a possible little bit of a bounce. Again, nothing much. You never know with these earnings when they come out how the stock's going to react in the next couple days. But if it gets down there today, there will be support. Let's take a look at Travelzoo, everybody's favorite travel company. Here's Tzu, trading down a little bit around $29. Stock is coming off of a high of $30.41 from yesterday. Watch this stock. Could trade down a little bit more. I don't see anything great, but this isn't really that big of a decline. Again, the stock looks like it's going to have some decent support around the 28.30 level, 28.25, and then ultimately around the 26.50 area. But nonetheless, stock is under a little bit of pressure. I don't see really many great levels for that one. Let's take a look at this MLNX. I've never traded this before, so I'm just looking at it for the first time. Very, very good pop coming off of a low. That looks like a strong gap up on this Mellanox. But there is very, very good resistance at 36, all the way up to 37, and then a little bit more, I'm going to say right around 37.40. So it looks like it's a pretty strong name. This is a light volume stock, so you got to be careful. Normally it doesn't even trade 200,000 shares a day, and catching pretty good volume yesterday. But I have to tell you, there's a lot of resistance up here around this 36 level, all the way up to 37.40, 37.50. Okay, so be very, very cautious there. Let's take a look at SanDisk. Everybody knows this, leading semiconductor play. SanDisk is getting hit today. Stock has pretty good support down here at 47.50. Any kind of a real break, you could watch for more support around 46, and then at $45. All of them will be bounce, short-term intraday bounce areas. Okay, the $45 level is actually the 200 moving average on the daily chart. And you also have a nice gap down there as well. So that should be really solid around 45 or appears to 45 if it does get down there. Right now, to me, the stock has a ton of support at 47.50 in the short term. We'll see if that level does get down there again today, which it very well may. Let's take a look at Caterpillar. I believe Caterpillar had earnings today before the bell. The stock is trading nicely higher. This stock is overbought. This stock is overextended. Do not buy Caterpillar up here. That is insane. Stock needs to come back in. If the market starts to fade, this is a fade candidate. If the market holds up, maybe Caterpillar will hold up. It really is going to depend on the dollar. But I'd have to put Caterpillar as a pretty decent fade candidate. I think it has a ton of resistance, even right where it is, and then much, much more around the 114, 115 levels. But Caterpillar should have a ton of resistance right here around the 112, 112.50 level. But I would not be a buyer of Caterpillar here. Stock is just way overdone. It actually could be a fade candidate. E-Trade Financial Corp. Everybody knows this. Some of you may have your accounts with E-Trade. Stock is getting hit this morning. This stock will have some short-term support around $8.34. After that, it's going to be $8 even number. And then after that, if it breaks below there, it's going to go to $7.40. And then $7.40, I don't even want to tell you. So let's see if the stock can hold up around the $8.34 and then $8 levels. Those are going to be some short-term support levels. I wouldn't count on them more than, just for scalping at this point. But that's a pretty solid decline on E-Trade Financial at the moment. Okay, so we'll see where this thing heads going into the rest of the day. But right now, the stock is down pretty sharply. It looks like weekly jobless claims are just been announced. Also, durable good orders are out. I don't care what the numbers are. All I want to know is how is the market trading? And the market looks like it's holding steady, trading up a little bit off of that number. Futures are now up 5 1/4. Again, the durable numbers look to be a little bit higher, but I'm not so concerned about that. What moves the market right now is the falling dollar. As long as the U.S. dollar index declines, the stock market will push higher, and that's really all it comes down to. But right now, durable good orders are out. Also, you have weekly unemployment claims or initial jobless claims are also out, and looks like the market's taking them in stride. actually ticking up a little bit more. So again, the euphoria is running wild in the market. Doesn't seem to be any stopping this freight train so far. We'll see if this market does get any kind of a pullback in the short term. But right now, market's holding up pretty well this morning. With that said, everybody, I want to thank you for listening, and we will see you all tomorrow on the charts. Have a great trading day, everyone.